Welcome to Insights over Espresso, where we explore how AI is reshaping and accelerating innovation within the VC industry. I'm your host, Joe Marone, and today I'm joined by Israel Suero from Dash VC. Welcome, Israel.
Thanks for having me.
You're welcome. We're glad to have you. So, Israel, tell us a bit about your background and the journey that led you to Dash VC. I'm sure the listeners would love to hear that story.
Yeah, absolutely. I'll take it back. I guess you can say my undergrad days. So majored in finance and investments and graduated in 2014 to date myself. But, years are a very important part of the timeline, right? And so the first couple years out of college, I mean, you're just trying to find the pathway. It's hard. And I empathize with college, up and coming college graduates, right? It's tough. It's a grind. So I was my first stint out of college. I was junior financial analyst at a boutique wealth management firm on Wall Street. And it was, wow, it was quite the first day. As I recount this story, it takes me back. The first day, you want to make a decent impression. You say hi to the managing directors. They didn't even look me in the eye. I was too insignificant. Like, oh, good morning. Go find your seat. I was like, oh man, it's already bad start. So I was like, I had my head down. I'm like, oh, that wasn't good. That wasn't smooth. And then my boss at the time, he gave me like like a how to don't bother anyone, don't talk to anyone. This isn't networking. You're here to perform, do the job. You earn your stripes later. I'm like, all right. Then like an hour later, after the bell rang, because that's one thing. You definitely, we're predicated on the market, right? So it opens at 9:30 a.m., close at 4 p.m. You better had been there 9 a.m. sharp. I know you're late, and they'll let you know it, right? And they'll shame you for it. And I recall it was like 9:45, 9:50, and a gentleman, he was on the conference call. He was on a call. It seemed like a serious phone call, I guess, I'm just going to assume someone important in his life, right? And then the managing director knocked on the door, barged in, started cursing in his face, saying, "Get back to work. What is this?" Yeah, that's wild, man. And then for lunch, yep, they had me go get pizza for the managing directors, right? So all that happened in a span of 4 hours or less. I was not gonna last long there, man. Joe, I really wasn't, right?
Welcome to the real world.
Yeah, no, for sure. Definitely, right? And it was part of the culture. Like people cursed at you. It was regular vernacular, right? And I'm not tolerated. I'm just saying that's just how it was. Different time.
Yeah.
So I was there for a bit, and I also, in those summers, I did some hedge fund fellowship work, right? And I was also an equity analyst for an equity trader, right? And I recall, we did that for 18 months or so. I
Hmm.
did that with the equity trader who was a friend of mine from college. And then we had a bright idea to start a hedge fund. Right. I was the analyst. He was going to be executing the trades. I built out the business plan. And there's a story of mine that gets forgotten. I don't bring this up because nothing climactic really happened. So we had the whole business plan. We wanted to raise $500,000. I was able to get a meeting with another college classmate of mine who was his family. They ran a family office, right? We had a meeting and all that. Of course, the meeting didn't go well, right? Of course not. Bunch of kids in early 20s wanted to start a hedge fund, right? And I spoke with my college professor. I told him about it. And he's like, listen, you're curious, you're enthusiastic. I got it. The framework here, it isn't it, right? Come on. Like, you got to be practical. Like, yes, be aspirational, but be practical. And I believe in that. I agree with that, right? And so this was now 2016. I remember reading an article in the Wall Street Journal, right? Before digital reading was as popular as it is today, I would actually, through my student membership still, I was grandfathered in, I would have the Wall Street Journal every morning to my house and I would read it. And, while breakfast, after breakfast, during coffee, right? And then I remember I read that the Saudi Arabia investment company invested $5 billion into Uber. When I read that, something clicked. I was like, you know what? I think it's time for me to get out of the finance industry and maybe apply to some tech companies. Uber was at the top of my list, right? And 6 weeks later, I heard back from Uber. It was a pleasant enough interview. And then they mentioned Uber Eats. They mentioned, all right, we have this new burgeoning concept called Uber Eats. Would that interest you? I'm like, yeah, sure. Why not? Let's go. This sounds interesting, right? And yeah, I was part of the first go-to-market team. Nowadays they call it go-to-market. Before they called it another fancy term, business development,
Yeah.
sales and operations, insert cool name, right? So I was basically, you get hired to do whatever it takes to get things done. That's what that means, right? Especially in early startup companies, right? And so I was part of the first Uber Eats business development team that launched and scaled Uber Eats in the New York City and New Jersey market, right? And that was a great experience. I was at Uber during a very transformative and tumultuous time. Travis Kalanick, he was the CEO, and a year later he got ousted. I'm sure you famously know, right? And there was even a show made after that. And I was there during that time, right? And then I was also there when Dara Khosrowshahi, he came on as CEO, and he actually visited the New York City office. That was cool, like a cool experience, just being there and being at Uber during that time, right?
Mm.
And yeah, that was great. I did that for a bit. Then after Uber Eats, I joined DoorDash as a early pre-unicorn company. Look at that. So, by the time I joined Uber Eats was a subsidiary of a $68 billion behemoth, Uber, right?
Mm-hmm.
Then I joined DoorDash, which, I mean, that was a risk in itself, going from Uber to joining DoorDash, right? And it was just a fit. It was a fit, right? It was a really smooth, one of my more smoother interview process, and I liked it. And it was, I mean, again, going from the Uber Eats office in New York City, in Hudson Yards, right by the West Side Highway, to a walk up in Union Square, DoorDash. I was like, oh boy, what a change! This is a really is a much smaller company, but that's the name of the game. I joined in pre-unicorn, and the trade-off is you get equity in the company, right? I want to be transparent about that in this on this podcast. Now, what do you know? A couple months later, SoftBank invested 525 million into DoorDash. Stock went up, private stock went up, right? The options, and kept up fundraising. I was at the time DoorDash when, I mean, that year 2018, it grew 10x, right? And a couple years after that, December 2020, it IPO'd, and I'm very, very grateful for that event, right? And the reason why I'm telling this story, Joe, is because all this is the catalyst for what I'm doing now, venture capital, right? And so let's fast forward. Dash VC, myself, along with my general partner Samid, we launched Dash VC in 2023, right? And it's called Dash VCA. We both work at DoorDash, right? And many of our LPs are from DoorDash as well, right? So that's fun fact number one, right? Fun fact number two is this venture capital fund is a spinoff from the DoorDash Angel Alumni Syndicate on AngelList. Between 2019 and 2023, the DoorDash Alumni Angel Syndicate raised over $20 million and deployed that amount of capital into startups. So then, with that established track record, we then founded Dash VC, the venture capital arm, right? And we invest in enterprise software and data infrastructure companies, which they utilize dashboards, to manage their data and their metrics, hence Dash as well, right? So
Yeah.
it kind of clicked, you know, Dash VC, the name kind of clicked. And, what's in the name, that's the story behind the name and the formation of the fund. And yeah, the fund now, a couple years in, it's doing well. We've had the privilege of investing in what we consider some of the best founders in the enterprise software space and data infrastructure space, as well as some non-consensus investments. And yeah, now I'm here. I have the pleasure to
Okay.
tell you the story over some good coffee, right?
Yeah, well, good. So going back to or looking back, let's not go back, but let's just look back at those Uber Eats and DoorDash experiences. How do you think that those shaped your perspective on identifying high growth opportunities?
Yeah, absolutely. Well, first, becoming an operator, right? In those companies, you learn, trial by fire. You learn how to become an operator, like it or not. It's very intensive boot camp, right? So you learn the ins and outs of utilizing software in startup companies, how to collaborate cross-functionally with the operations team, post-sale team, engineers at times, right? Product team. So you learn cross collaboration functionality. That's number one. Number two, I had the privilege of working with some of the smartest people I've ever met. Right. I can name them, right? At Uber Eats and at DoorDash, folks that I worked with then, present day, they're now operators and founders of current potential unicorn companies, right? And so by being in those rooms, also never being the smartest person in those rooms, there's always someone smarter, learning from them, being a sponge, right? And being in those rooms, you're able to pinpoint the idiosyncrasies that it takes for future founders to scale, execute, and operate, right? And yeah, that was the learning ground for that.
Okay. So what problem would you say Dash VC is solving in the world of early stage AI investing?
Yeah. So as you know, right. AI. I want to begin at the foundational level. What is AI? And I think in popular culture and in lore, people think AI is sentient robots. And to an extent, it is, right? But think more granular. AI is data aggregation,
Hmm.
right? And optimizing that data for a specified outcome.
Hmm.
That's what AI is. So when you say it that way, it's much more boring than in the movies, right?
Yeah.
So what we see in today's digital, world, there's so much data, and it's not unified, it's messy, it's unstructured, right?
Hmm.
And so what AI does and what these up and coming AI companies are doing is making sense of this data. As they're saying, data is a new oil, right? So back in the
Hmm.
90s, and I know you're currently in you're based out of Texas. In the 1950s, you had a lot of Texas folks coming across good oil, right? And one of my favorite movies actually is Giant with James Dean and Elizabeth Taylor, right? So I recommend that movie for those that haven't watched it. It tells the story of how new money was made in Texas by drilling oil in Texas oil fields, right? And so that's what's going on today. What's going on today is, data's the new oil, and now these companies, they're building the picks and shovels of this current industrial revolution. And
Hmm.
so Dash VC, we're in the front lines of finding and nurturing these founders and investing in these founders because they are building the picks and shovels, both physically and also digitally, of the current AI industry, right? So again, enterprise software companies, data infrastructure, right? Some hardware companies we've invested in, they're literally solving the issues of capturing data, making sense of it, streamlining it, and making companies out of them.
Mm, interesting. So when we spoke our pre-conversation, you emphasized investing in exceptional founders. Can you elaborate on what that means to or for Dash VC?
For sure. And, Joe, in this industry, I like to give as much credit as I can to founders, particularly exceptional founders, right? So, all right. I know it's a very subjective term, exceptional founders. Every VC fund, they say they invest in the top exceptional founders, right? So this is what I believe makes exceptional founders. So, for example, yes, I will be very honest. We, folks founders that we invest in, they do come from top institutions such as Harvard, Stanford, Yale, Columbia, UC Berkeley. Some have worked at companies such as Meta and Palantir, right? So pedigree does matter, but just because you went to those institutions, you're alumni of those institutions, doesn't mean we're going to invest in you. That's the byproduct of their excellence. It's, after we have a call with these founders and when we find out, oh, they come from said Ivy League school, oh, of course they do because it's a byproduct of their excellence, right? So that's standard. That's standard. So, for example, one of our founders, when he was in high school, he placed first place in an international mathematics competition and an international robotics competition at 16. Look at that. That's that already. Those are beginnings of someone being exceptional. Then got accepted to Harvard, went to Harvard, dropped out of Harvard, became a Teal Fellow, and started this company that is now worth $5 billion. If that's not exceptional, I don't know what is, right?
Yeah.
So that's one example. Another example, we invested in two founders. They're sisters. One of them went to Yale. The other one went to Stanford. The one in Yale, she is a Toyota scholarship recipient and a Coca-Cola scholarship recipient. One of the hard, as you know, Yale, as the other Ivy League schools, they do not provide merit-based scholarships, right? Because everyone there is smart per se, right? I mean, of course, that is true. So obtaining scholarships to those institutions is very, very difficult. So she obtained two scholarships, Toyota and Coca-Cola, very competitive scholarships, and able to go to Yale, not paying a dime. And like I mentioned, her sister went to Stanford. So their excellence, you can trace it back to their household, to how their parents raised them, right?
Yeah.
I'm sure they have very respectable sibling rivalries. And look what they're doing now. They're both together building a great company, right? And another one of our founders, he is a second time founder. And last year when the Department of Defense was cutting their budgets, right? This company, they were able to sign 3 contracts with the Department of Defense. He understands the political landscape. So with that, he leveraged those Department of Defense contracts. He then had meetings with South Korea and Japan's Ministry of Defense. And they said, well, if you sign contracts with the United States, they're good enough for us. And now he's scaling the company in Asia. So that's what I mean by exceptional. We
Mm,
expect these founders to solve the hardest problems in their respective industries.
that's good. That's good. So let's zoom out a little and look at the wider AI and VC landscape. So, what major shifts or trends do you think are shaping the future of early stage investing, especially with the proliferation of AI that you mentioned when we spoke earlier?
Yeah, for sure. So a lot of deals that we've been seeing lately are go-to-market engines, for example, right? There's been the rise of the go-to-market engineer, coined by Clay, and the prosumer, right? And so we're seeing a lot of that. We're seeing right now that it's looking to be a very crowded space. And I think that's always been the problem, right? So Salesforce, I've used Salesforce as a sales rep for the majority of my career. I'm sure you're very familiar with Salesforce as well as your audience, as well as HubSpot, right? They're the two dominant CRMs in the industry, right? But what they do is they are a source of data. They're a truth of data company, right? They're not, Salesforce, and this isn't a criticism, is just what it is. Salesforce is not a go-to-market company. They're not in the market for go-to-market strategies, right? It's you get unstructured data, you enter it into the Salesforce database, right, to the CRM, and it's a very manual process, right?
Mhm.
And then you're able to create dashboards, reports, and all that. You're able to make sense of the data, but you have to physically put the data onto
Yep.
Salesforce,
Yep.
right? That's a very arduous process when you're trying to scale that in the enterprise level, right? So they're not go-to-market companies. Clay, Apollo, Fiverr, those companies are go-to-market companies. So now with AI and with generative AI, now agentic AI, these AI methodologies are being leveraged to make the go-to-market process more actionable than it ever was, right? So I want to provide an example, right? In case that was difficult to explain, right? So let's say you are a software provider for mid-market hotels, right? You want to be able to sell to, let's just say, I'm random number. The total addressable market is 10,000 hotels that you're trying to sell to. You're trying to sell this software to, right? What are you going to do? You're going to Google all these hotels, right? Or even chat GPT all these hotels on a spreadsheet and then add them onto Salesforce, right? That takes a long time, right? So what these go to GTM revenue GTM engines are doing is basically, all right, you create an agent, an AI agent, where you're able to capture all the names, the contact information, the owners and the general managers of these hotels, and create a spreadsheet, thousands of rows and cells, right? So you have the data, and then you import that data. Well, first, before you import the data, you make sure that the data enrichment side is pure, is on
Hmm.
point, is very detailed.
Yeah.
Then once that's done, you're able to import that onto the CRM with all the information, and there you go. That takes before you used to hire teams to do that.
Yep.
Now you do
Yep.
that in literally 10 minutes.
Yep. Yep.
So that's one industry that's booming. And another industry that's moving that I'm seeing a lot is text to speech. So voice AI, right?
Yeah. Yeah.
But
Yeah.
voice AI it's a very broad term. So when you think voice AI, people probably first think of Whisper, where that's voice dictation, right? Where you are dictating what you want to write and it writes it for you. Yes, that's voice AI. But text to speech is AI models that are capturing all the text data that there is, right? In order to make voices out of that.
Yep.
So essentially, text to speech, and I read this sentence, text to speech is essentially, the voice layer for the future of AI.
Yep. Yep.
And
Yeah, we build a lot of voice agents for SMBs. And when I say SMBs, a company between 1 and say 50 million.
Mm, mm.
So what do most people outside of early stage AI investing misunderstand or underestimate about the work being done in this space, particularly regarding the signal versus noise challenge? What do they misunderstand or underestimate about the work being done in and around AI, particularly regarding the signal versus noise challenge?
Okay. All right. Very important, signal versus noise, right? So, as you know, there's a lot of noise. And because of the rise of AI and the proliferation of all these new products, you're seeing copycats every day. Every day you're seeing copycats. And you have this new, cool, trendy founding team that comes with this gimmicky product, and people are flocking to invest in it. Patience. You'd think that in early stage investing, the decision making has to be fast, sure, but also has to be precise, right? And I think that's the main difference. And that's what I feel like a lot of investors don't differentiate. Like, for example, we've come across, these two industries that I mentioned, go to market and voice AI. We've come across a plethora of founders in this space, right? But we're being patient, right? All right, this meeting was good. This founder was good. We have 7 more meetings to go with other founders. Let's continue and see what's out there. Let's actually see the differentiation. What makes them different? How are they thinking about the process? Yes, there is a total addressable market, but there's also a serviceable addressable market and a serviceable obtainable market. Which of these founders and or companies do we think is going to capture the sum, right? And once you capture the sum, then they could capture the SAM and then a piece of the TAM, right? I like to look at it that way. We
Okay.
stress test. We stress test. Let's say after we have a meeting with a founder, we gather notes, right? And then we create a report on it. And we're talking anywhere from 2 to 3 pages report. We don't want to spend too much time on information gathering, right? Because sometimes information gathering is addicting. You gotta act on it. And then let's say if there's any 3 pages worth of report, every line item we go through it and we debate on it on a think tank session, right? And the less X's the report has, well, we found the team, right? So that's just one exercise that we do.
Yeah. Okay. So let me ask a hypothetical. If we were having this conversation 5 years from now, right? What do you think would look completely different in early stage AI investing?
Ooh, probably you'll have a team, so emerging VC funds will probably have AI agents scouting. I mean, we're probably seeing that now, right? Well, I mean, we're even having internal discussions about that, right? I mean, I'll be honest, even now, Claude or ChatGPT, they are better analysts, investment banking analysts than the best investment banking analysts from 5 years ago, right? So you know how a big part of early stage investing is scouting, right? You got to scout these companies. Well, we
Mhm.
probably build out AI agents that will do the scouting for you, right? And then you input your own algorithm, what makes an exceptional founder. You create a nice fancy workflow chart, right? And then you'll have the AI agent, so let's say when we're here on the East Coast sleeping, the AI agent is going to be scouting companies in Europe, right? In the European markets, for
Mhm.
example.
Yeah.
So that's what I think. Even
Okay.
in less than 5 years, to be honest, with you. Eventually, I've heard that GPs, there's going to be some GPs that are going to be AI. Listen, let's not get silly. There's still a human element involved in
Oh
investing.
yeah. Yeah. You're never going to remove that.
Yeah,
So same question, but on the flip side of the coin, what might stay exactly the same, especially concerning, what you just mentioned, the human centric nature of venture capital.
fundraising, as you can imagine, fundraising from LPs, from investors, it consists of a lot of trust, right? So just how we do due diligence on founders,
Yeah.
limited partners, they do due diligence on general partners, on VC funds, right?
Yeah.
And there's no AI that could replace that.
Yeah.
Like there is no. You need that. I'm
What
so old.
AI do is identify the list of those, identify,
Sure.
reach out, help create an impression in their mind of you, the venture capital firm. But at the end of the day, like you said, it's a relationship.
Absolutely right. And
Yeah.
once that LP is ready to sign that check and wire it, well,
Yeah.
either A, you sign the check, or wire it, right?
Yeah.
No one really signs a check anymore. That was a human to human interaction.
Yeah. Yeah. So where do you see the biggest opportunities for innovation or impact within AI? Within either AI, the enterprise software space that you focus on, data infrastructure sectors right now.
And by still is because we made this bet a couple years ago. I'm gonna say inference and latency, right? You know, it's taking the costs are enormous for running these models, these AI models. So, for example, we've seen it. OpenAI and Anthropic, they're continue to raise billions amounts of dollars, to run these models on data centers, right? The costs are enormous. And although GPUs, I mean, as of right now, as of this decade, GPUs, they seem to be the asset of the decade, right? They can only do so much. As you probably know, and as you can infer, GPs, they're not as optimal as you may think. GPs consist of a lot of hardware and a lot of unused hardware, right? Thus making the process very inefficient. And so we feel, and we made a bet. We are investors in this company called Etched. What Etched is building is ASICs chips, application specific integrated circuit. And with the purpose of one task, running transformer models on these ASICs chips. That's the
Hmm.
only task. And right now, that's the dominant AI model, transformer model, right? And so in doing so, you're able to eliminate a lot of the unused hardware that GPUs have. right? And once you're running these transformer models on these ASICs chips, you are reducing latency. And when you reduce latency by a magnitude, which is a 10x, costs go down. You're not utilizing energy and other resources such as water as much as data centers are now using. So once that happens, I mean, it'll open up. If people think there's an AI revolution right now, once latency continues to reduce, forget about it.
Yeah.
Then we can start talking about AGI, for example, right?
Yeah.
People think that the inference segment is
Okay.
one that is still not untapped.
So in our earlier conversation, you had mentioned Etch. You had also mentioned Nectar Social. Can you share another real example that, I think you had alluded to for both of those, the founders' exceptionality led to a meaningful investment decision. So could you give the listeners another example of, other than Nectar Social or Etched?
Yeah, absolutely. So one that immediately comes to mind is Pallet. Pallet is building agentic workflow for the logistics industry, right?
Mm,
Real exciting stuff, right? Logistics. But as your audience and as you probably can assume, the logistics industry is very manual. It's a legacy industry where you have folks in offices inputting the data one by one on these massive sheets, right? It's a very arduous process. It takes too long. It's a very manual process, more manual than arduous, right? And so what Pallet does is they built an agentic workflow to do this process for you. So what used to take probably days, it can be done in less than a minute. So imagine that
wow.
level of optimization in the logistics industry. So that's another example, right? That is a company called Pallet.
Okay.
And I have
Interesting.
more. I mean, I could talk
Yeah,
about
yeah. No,
companies for
that's
days.
good. So what makes Dash VC different from other early stage venture funds trying to solve, the same problem of identifying those promising AI startups?
Yeah, absolutely. So our team, I think, and it might be biased, yeah, a little bit, but at least I could back it up with some facts, right? I think we have an excellent team, an exceptional team. One of our partners, he scaled AI operations during the Obama administration for the U.S. Navy back in 2013. So he's a AI savant, right? He was also an AI operator and data robot in Jasper, two AI companies, right?
Mhm.
Dating back to 2019, right? So this gentleman, he is a AI researcher for more than a decade. Now everybody started using AI since the release of ChatGPT November 30th, I believe, of 2022. Yeah,
Mhm.
he's been working in AI 9 years prior to that. So he's already been having a head start, right? So he is one of our partners.
Okay.
The other partner, or the general partner rather, you know, he got a Master's of Science in Data Science from UC Berkeley, and he was awarded the Hal Varian Award, right, for the best capstone project. And again, data science, back to what AI is. AI really, at the foundation, AI is the aggregation of data and building outputs for that data, right? So he received an award for the best data science project before COVID, right?
Right. Right.
And
And
so
is he one of the co-founders that was at Sequoia?
yeah, so he was a venture scout at Sequoia as well,
Okay.
right?
Okay.
Yeah.
Yeah. So do you think that differentiates your approach? The fact that you've got this deep network, your that one partner's background at Sequoia, does that differentiate your approach to things?
Absolutely, yeah, absolutely, because that's where the difference between signal and noise, right? Our team, we've seen a lot of noise. I mean, we've heard a lot of noise, full of noise, right? We're based out of New York City, San Francisco, LA, Seattle, right? Cupertino. Noise is the most abundant thing you can find in these cities, right? But being part of institutions such as Sequoia, UC Berkeley, Columbia, Yale, DoorDash, Stripe, all these companies, we like to think we're as exceptional as these founders, right? I mean, maybe not me, but my partners for
Yeah.
sure, right? For sure, I want to give them their flowers, right? And yeah, and we're very data centric, we're very AI centric and objective, quantitative about our assessment of these companies, and I think that's our edge, right?
Okay. Okay. So how big is Dash right now? How many people in total?
In total, partners, analysts, and fellow
Yeah.
a six, and then it's a rotational product. It's a rotational. We have a rotational venture fellow program.
Yeah.
So once they complete their rotation, they're an alumni, they're an alumnus, right? And they just scout for us, right? So
Okay.
that's including our rotational scouts as well.
Okay. So what's next for Dash VC? How do you see the firm evolving over the next few years, especially given the ongoing discussions about leveraging AI for internal operations and more?
Yeah. So for this year, 2026, we want to deploy the remainder of our capital, right, and continue investing in what we believe are the best founders in our sectors of interest, right. And for the future, we want to have a fund too, right. We're already having internal conversations about a fund too. That's exciting stuff, right? Because again, this is very much a proof of concept fund. Come fund
Okay.
two, our LPs, we hope to gain more institutional LPs, family offices, funds of funds, ultra high net worth individuals. So that's certainly our North Star in the next 2 to 5 years.
Okay. So what does Fund One, what's its total, and what do you expect Fund Two to be? Or what would
In
you like?
terms of assets, in terms of
Yeah,
assets under
yeah.
management, yeah, not small, a little over 3 million, right?
In Fund
Not
One.
Yeah, fund one, a
Yeah.
little over 3 million, right?
Okay.
Not including our SPV. So in some cases, we deploy capital in tandem with the SPV,
Yep.
right? That's also like our value proposition. So in some cases, let's say we'll write $100,000 check. But then if it's a high conviction bet, we have an SPV and then we'll raise a 250,000 from our SPV. And then it'll be a $350,000 check from the Dash ecosystem, right?
And how many
So
SPs are you doing in a year? More than two or three?
much less, much less. A couple years
Okay.
back, we would
Okay.
do several a month, right?
Oh wow. What
Yeah.
what
So
changed?
what changed? So as we're investing in these AI companies, well, first of
Yeah.
all, we want to prioritize the VC fund as
Yeah.
opposed to the syndicate. That's number one.
Right. Right.
Number two, the high interest rate environment. But number three, we've noticed founders because they're building in stealth and in these proprietary concepts, they want to leave it closed to fully vetted VC funds. That seems to be
Hmm.
the case this time around compared to 5, 6, 7 years
Yeah.
ago,
Yeah. Yeah.
right?
So what's your goal for Fund Two? What do you expect to raise there?
The rule of thumb for fund two is 3 to 5x more than fund one.
Yeah. Okay.
So I'd like that. But
Okay.
in the case of some legendary VCs, their fund ones have been 3 million, sometimes 5 million. And then their fund two, depending on how exceptional the returns of their fund one was, they go on to raise 100 million, right? I can name a couple, they've been successful at that. Good for
Wow.
them. We hope to have similar fortune, but the rule is fund two is 3 to 5x more than fund one.
Okay. So let's take a look at we asked about, hey, where are you going? But let's take a look at where you're going again, but kind of laser down on looking at over the next 12 months. What do you think growth's going to look like as you focus on expanding deal flow and LP relationships?
Yeah, good question. Good question, Joe. And I'm taking notes down myself because that's what we're going to talk about internally. Can you repeat the question again?
So as we look at your growth over the next 12 months, I wanted to kind of shine a laser light on what particularly do you see, you know, eh, you doing as you expand deal flow and LP relationships?
One thing is we just hired a venture fellow, right? And the whole thesis around hiring this new venture fellow is our marketing and content strategy, right? So we are a Regulation D fund. So during fundraising under SEC guidelines, we have to be very careful how we
See,
so
right, right.
506B
Yep,
fund,
yeah,
you're able to market the fund,
yep,
aka solicit the fund.
yep,
B, you cannot do that. You have to be very
right,
careful. Like your language, the marketing language of a 506B fund, you have to be very careful
yep,
under SEC guidelines. If not, you can get fined and the fund could be shut down, right?
yep,
And so for the first 2 years, the existence of this fund, we've done zero marketing. And that's tough, let me tell you. It's tough when it comes to fundraising, and it's tough when you are fighting for deal allocation, right? Now that we finished fundraising, we are building out a marketing content strategy, right? And we just hired a venture fellow. She is going to be spearheading that. And we look forward to that. She's going to be spearheading a content strategy for Dash VC.
okay,
And
that's
that could
great.
be a differentiator, right?
Absolutely. So you mentioned that your deal flow originates today from private Slack channels, emails, and that, 85% of VC is boring work, right? We both chuckled at that. So
Yeah, yeah.
what's been the toughest part of managing deal flow and optimizing internal workflows to avoid missing good opportunities?
The toughest part is the next deal always looks better than the previous, right? I'm being a little bit humorous and facetious, right? But no, there's a lot of great deals out there. So when you get after you finish a call, a good call with a founder, you just want to invest, 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 right? Sometimes it feels that way. That's why you got to sleep on it for 24 hours and then get to your objective work, right? I think that's a difficult part because a lot of these, again, you're speaking and meeting with exceptional founders, very, very bright individuals, right? And so after, I was like, all right, this one's good, right? And remember, VC is a no business. We have to say no. The majority VC is a no business, NO, and it's a we don't know business, KNOW, right? And you are saying no to the majority of these companies. And there's some good companies that we've passed on, we've built, you'll see a couple years from now, we'll look back and we would have built a respectful anti-portfolio probably, right? For sure. The stories for another day. As VC, you're supposed to pass on some deals. It's supposed to be hard, right? It happens. So I think that's definitely a difficult part. Sometimes
Yeah.
we're presented with 10 deals. We have to pick one. And sometimes it comes down to two. And then you have to say no to the other nine. You say yes to this one. But then back to the no business. We don't know if that company's going to have a unicorn exit. You hope it does. And
Mm-hmm.
we have the data backing that up. But in reality, that whole process just explained and illustrated right now, that's hard. That's hard for sure.
Okay. So, are there any bottlenecks that you're experiencing around either deal sourcing, relationship intelligence, or content creation? I know the answer to content creation because you said, that's why you hired the fellow. You need some help in that area. So,
Yeah,
what
absolutely.
about deal sourcing and relationship intelligence?
So I will say deal sourcing and relationship intelligence are our strength, actually, in terms of where we are in the ecosystem, in the Silicon Valley ecosystem. We're very grateful. We get invited into a lot of deals, right?
Okay.
And I'll give credit to my GP for that. Like I said, Sequoia Scout, he's been mentored by Alfred Lin. And for
Yeah.
those that know Alfred Lin, or even for those that don't know, Midas Touch, continuous best investor in Silicon Valley for several years in a row, right? So, and he'll say, "Oh, I wasn't mentored by him, but he's a humble individual." But yeah, he's a Silicon Valley whisperer. Like we are a team of Silicon Valley whisperers, right?
Hmm.
So I think that's our deal sourcing and relationship is our strength. And I will say this, Joe, I can't speak too much on it, but we officially got allocation in a huge deal by a top Silicon Valley statesman. We just got allocation in that deal. And again, it was invite only, right? And so that
Nice.
definitely
Congratulations.
is, thank you, thank you. That definitely is our edge.
Yeah, good, good. So as a firm innovating fast and in the AI space, what are your top priorities this quarter?
Hmm. Okay. Content is one of the top priorities, right?
Okay.
That's one of them. The other one is we just initiated a capital call. We're on top of business. We have a commitment to fulfill. We have to invest in the best founders and what we think are the best founders. January, this is the last week of January. We got 8 more weeks to invest in some other top-notch founders, and we already have a pipeline. And so every Friday, go figure, we're internally as a team getting on these calls, right? Having we call think tank sessions,
Yeah.
and we are stress testing these founders and their products and their companies, right? And how much we're going to invest, if we're going to invest, etc. Right? And so that now that we're not fundraising, we're focusing on this, right? And when I say content, I mean storytelling of the VC fund, right?
Yeah.
This is our second time we're speaking, Joe. I've mentioned some stories to you, right? And so why us? Why Dash VC, right? And I'll be clear, I think Dash VC is the best VC fund you've never heard of, right? You hear a lot of like emerging VC funds. People haven't really heard of us, We want to change that, right? I think we owe it to our founders and to our LPs that we are, we're coming up on lists, right? When people mention, oh, these are the most spoken about emerging VC funds, right? Like we want to make it a goal to be on those lists, right? For awareness, right?
Yeah.
Which I feel that's something we haven't really been great at, but more so on purpose because more so on purpose. We want to be like invisible VC fund per se, but now we've built a
Yeah.
track record. We're confident in the position that we're currently at. and let's tell the story, right?
Yeah, you no longer want to be the best kept secret,
Correct. Yeah, no, no, we're here.
right?
We wanna invest in top founders.
Yeah, yeah.
We wanna hear your ideas, right?
In our pre-call, you discussed considering building an AI agent for deal sourcing. So how does that fit into your immediate goals, whether it's this quarter or this year?
Yeah, it's a goal. It's a goal. Right now, it's we are considering the idea, right? Because eventually we're gonna have to scale our scouting process, right? Just how all these companies are being built, we have to source at that equivalency, at that rate of equivalency, right? You don't want to miss out on opportunities that are essentially our neighbors, right? And so we're having internal discussions about building out an AI agent to scout and to even analyze our deals. And I want to be clear, it's not for the AI agent to do to do all that work. It's for the AI agent to work in tandem with us.
Yep.
Right.
Yeah. I mean, you leverage the AI agent to do more of the heavy lifting, and then you do the more strategic relationship based work. So, hypothetically, if you had a magic wand to fix one thing in the business right now that's either holding you back or slowing you down to get to where you want to be, what would that one thing be?
More money. Just again, and that, I'd say like I was having a conversation yesterday. Imagine if you won the lottery, right? We just retired a beach. No, I keep on doing this just at a larger scale. You know,
Okay.
at larger scale, and by mine, I'm talking about like in the hundreds of millions, right? And
Okay.
by no means am I an overlord. I'm not. That's not what I'm trying to say here. But we have a job to do. Our job is to be stewards of capital for our limited partners and to
Yep.
provide capital to what we feel are going to be transformational founders that are going to change essentially the world for the next 20 years. We're on a mission, and
Yeah.
this mission takes a lot of capital. And in this mission, you have the founders, the LPs that we have to return capital to, our stakeholders. We, the team, we're here. We're at the bottom. We're serving. We're here to serve the ecosystem. This
Okay.
is a role of servitude. I want to be clear, right? VC is not partying in your yacht or a private island. No, no, it's not. This is a service role, right?
Mhm.
And we're on a mission, and
Yep.
this is the mission, right? And it's not the mission is not partying in Ibiza. There's no problem doing that, right? But that's not what we're doing. We're locked in. We're focused. The gratification for us is delayed.
Yeah. You're trying to grow these firms that you're investing in. So, for founders or product leaders listening, what advice would you give them about navigating the noise in the AI startup landscape and truly standing out to VCs like Dash VC is?
Well, I'd say one question I want founders to ask themselves: are they the best in the world at what they're building? You gotta be honest with yourself about that. When we invest in founders, is because we think this founding team, they're the best in the world to solve this particular problem, right? So as a founder and a product builder, you have to ask yourself that question and be honest with the answer. You cannot be B plus. A lot of us are B plus people, and that's
Mm,
okay. A B plus is pretty good. If you being a B plus person, you'll be a decently successful person. Being a founder, you cannot be B plus.
right.
Being a founder, you got to be A plus and probably still fail. All right, that's what it takes. And so they have to ask themselves that question.
Okay. So, similar thread or thought process, what's one key takeaway or piece of advice you want our listeners to gain from a conversation with you about the future of AI investing or VC operations?
Good question. One, VC operations. VC is a lot of admin work, I will say. I know, when speaking about VC, people want to know about the financial modeling process, the deal allocation process, and the fundraising process, right? Sometimes they think the fundraising process is cocktails and private events, right? No, a lot of VC is emails, a lot of emails, right? That's really what it is, and a lot of back end administration, a lot of boring work, right? That's 85% of the work. The 15% is the fun stuff, as investing in companies, having meetings with founders, right? So for burgeoning VC operators, I want them to understand that, right? So that's one thing. And another thing, one come to take, and we didn't really touch on this. This goes for both VC operators and founders. It's okay to fail. So it's okay to, when I look back at my career, in my career, I failed a lot, right? You have to go through some sort of adversity. It's okay to talk about your failures, but it's also necessary to learn from your failures and position yourself to why you're ready now. And because you're now ready, because all the failure you've gone through before, now you can position yourself to be an exceptional VC operator and or exceptional founder because you've built a track record of resilience, right?
So where can people learn more about Dash VC, get in touch with you or the team and follow your work?
Yeah. So our website, vc.com, right? We just recently updated our website. So again, vc.com. That's number one. Number two, LinkedIn. We have Dash VC has its own LinkedIn page. We don't use it that much, but what I will say is go to our LinkedIn page and then you see our team, people, our team. You can give us a follow, reach out to us, right?
Well, good, good. So thank you for sharing such valuable insights. Really enjoyed having you on today's episode.
Joe,
And
thank you for having me.
it's been a pleasure. I think you shared a
Likewise.
lot of great insights.